Dow Award recognizes creativity and excellence in the field of technical analysis. It might seem like it's difficult to come up with an original idea in a field where there's more than 100 books written on it just by the people in this room. And the authors of this year's paper started with the ideas of John Murphy, Edson Gould, and Martin Pring. They built a relative strength indicator on the Dow Jones Utility Index that beats the market all by itself, which brings into question the efficient market hypothesis. This simple indicator is fully detailed in their paper that'll be available for everyone to read on the website. And they explain the theory behind it, giving you the confidence to know that this indicator is likely to work in the next bull market and bear market. Ladies and gentlemen, please help me congratulate this year's winners, Michael A. and Charlie Bilello.
Thanks, Mike, for that gracious introduction. First, we'd like to thank the panel of judges and the board of directors of the Market Technicians Association for honoring us with the Dow Award and for putting on this wonderful event. One of the great things about studying technical analysis is that our education is never complete. We're constantly learning and adapting to changing markets, and the field is forever expanding. We hope that our paper, An Intermarket Approach to Beta Rotation, continues in this tradition and illustrates the powerful and practical impact technical analysis can have on institutional money management. The Market Technicians Association has had a huge influence on my own career. I had been a proponent and a student of technical analysis for a long time, but I only learned of the MTA in 2009. As soon as I learned of the organization and the Chartered Market Technician program, I immediately registered to take the first exam, and I knew that this was the career path that I had to follow. By deviating from my original path, I was certainly taking a large risk. But as we all know, the amount of return is often commensurate with the level of risk taken. And looking back now, as Peter Lynch would say, it was a 10-bagger for me, both personally and professionally, because it meant that I was following my true passion. I'm sure many of you in this room can relate to this story and the impact this organization has had on your own career. I was always more of a top-down macro thinker, so intermarket analysis was the area within technical analysis that I naturally gravitated toward, and the same was true for my colleague Michael as well. To be able to build on the work of prior MTA annual award winners in Edson Gould, John Murphy, and Martin Pring was a great honor for us, and we share this award with them for their contributions to the field. I'll now hand it off to Michael to tell you the rest of the story and the idea for how we came up with the paper. Thank you.
Thanks, Charlie. I kind of feel like we should be taking like a selfie or something. Maybe we get like Ralph Acampora and Bob Pisani. Maybe we can get like more retweets than Ellen at the Oscars. What do you think? No? Well, it's worth a try. The inspiration for the paper came from my father's own work on intermarket analysis and investing. His book, which you should have received earlier today, discussed the predictive power of the utilities sector as a leading indicator of the stock market. I'd like to dedicate this award to his memory for all he accomplished and his passion in the field of investment management, which I'm doing my best to carry on in terms of his name to this very day. Utilities are kind of a funny sector. I know everyone focuses on transport and Dow theory, but it turns out the area of the market which is most boring, which nobody discusses, is perhaps the most predictive sector of all. Not just from the standpoint of outperformance, but from the standpoint of predicting volatility and possible corrections to come. But I guess then again, that's how markets are. They tend to provide the most powerful tells in the areas you least expect. I know there are a couple of people that follow me on Twitter here. And on Twitter, @PensionPartners, shameless plug, I've been making a point the last few weeks to tweet out the line that alpha is beta rotation in disguise. I did this partially to tease out our winning of the Dow Award, You know, we do believe that beta rotation is a very powerful concept. Not only can tactically increasing or decreasing beta in a constant stock portfolio enhance total returns, can lower volatility quite a bit as well. And while it is impossible to fully predict risk and to eliminate risk in the business of investment management, we can at least strive for better portfolio management. And our hope is that our findings are explored further and expanded upon by academics, traders, and investors. In closing, I'd like to leave you with a lesson my father taught me, which I believe is applicable to the both of us, personally and professionally. Bet on yourself when no one else will. After all, the payout is much higher that way. Thank you very much.